Hey guys, welcome to FlowThatCash podcast. My name is Hewitt. I'm going to be your host for today. So this is where we're going to talk about how you can start building wealth through real estate investing. So my partner and I have been doing investing in the US since 2021 as a Canadian. So if you are a Canadian looking to invest in the US, you can let us know or join our free community in the link below, okay? Now, before you do that, I want to share with you our mission. My mission is just to share our journey with you guys, and I want you all to follow our journey, but also I want you to succeed in your journey as well. So today we have a special guest, and I'm gonna let her introduce herself. Her name is Stephanie. Let's give it over to Stephanie. Why don't you tell us a little bit about yourself?
Yeah, thank you so much, Hewitt. Like you said, my name is Stephanie. I am a mortgage agent level one here in Ontario, helping home buyers, with strategy, correct planning to get to their end goal.
Now, well, we talk about it, but why don't we share to our listeners, like, how did you first get into, mortgage industry in the first place?
Yeah, funny story. It was actually rejection by the bank when I first actually went to inquire for my first property.
Really?
Yeah, I was really young and I went to the bank. I had some savings. I had a full-time job at that time. I also had a little one at that time. So I went in and I was like, hi to like my financial advisor that I had in a relationship with established at the bank, like your neighborhood bank.
Yeah.
And I'm like, can you just quickly run my numbers and see, where I'm at this point? And then she completely shut me down. And I was like,
Oh,
oh, okay. And I was like, okay, I guess I got to work on it a little bit more. So that was my first. And then I was like, hey, but like there has to be a way. So kind of let it go. Then with my partner, we got into real estate investing and we kept seeing, a lot of strategies and at some point, a lot of investors cap it with your local bank. And we're like, hey, well, how are they building their portfolios? So after that, I was like, you know what? I want to get into becoming a mortgage agent so I can help one first-time home buyers. After that rejection, let's plan, let's strategize. Because had I know then that I could have reached out to a mortgage agent,
mm.
maybe I would have gotten that property. And
Yeah.
and then with real estate investing, we wanted to see that creative financing that they always talk about, and different examples of how to get into the market and build your portfolio. So that was how I got into becoming a mortgage agent.
Awesome, awesome. I think rejection is the best lessons, right?
Yeah, absolutely. It
One
definitely
of the
gets
best
out of your
lessons.
comfort zone to learn.
Yeah. That leads me to my next question because I'm sure most Canadian who may be a renter right now, or maybe they own their own principal home, and they might want to get like a second home as a rental, right? But where do you see most Canadian kind of like misunderstood or misunderstand about like mortgages or even how to fund that home?
Yeah, so let's break it down with the first-time homeowners. I see that they are really looking towards the interest rate. Who
Mm,
has the best interest rate? And personally, ourselves having been through real estate investing, sometimes it's not necessarily about the interest rate. It's the overall bigger picture of how you've strategized and structured the mortgage.
mm,
So I think that's one of the misconceptions and something that they really focus on instead of the overall picture of, okay, yes, there's an interest rate, but let's see your bigger picture. For example, are you more comfortable with a fixed rate?
mm.
Even though it's a little bit higher, what's your comfort level? Variable. Yes, it's low, but are you able to go on the ups and downs with
Right the
a
wave.
firm? Yeah, exactly. So I would say that's one big misunderstanding.
Okay, okay. So what, how would you kind of like advise someone to kind of like think ahead or prepare before they talk to like a mortgage agent?
Yeah, yeah, I would say, well, you can always call your mortgage agent because we're always here to give that knowledge,
Yeah.
whether it's something we close or we don't close, we
Uh,
can give you the building blocks. I call it a little bit of homework to get to where you're going. And you can also research a lot of things. I know with social media, it can actually get overwhelming and then you feel like you didn't really find anything out. But
mm,
talk to the person that you know within your circle. You can contact me, of course, and
yeah.
we can go over, where you're at, even if it's just looking at your credit score and where you're
Mm.
at,
That can
you
be a
know?
good start, right?
Yeah, exactly. Because, there's a lot of components. I call it like the four pillars of a mortgage application. You have your credit score, your income, your down payment, as well as the subject property. Because sometimes you might find a place that you love, and unfortunately, the bank won't cover that type of area or, the
Mm.
structure. So it definitely contacts somebody.
Four pillars. What is it
Yeah.
again? Credit
So the
score.
four pillars I say are credit,
Yeah.
income, down
Income.
payment, and the property. So it's very within our scope of what we do that we like to, let you know that those four pillars are the most important in your application.
Okay, okay. Yeah, I think based on the questions earlier, most people are looking at the rate for sure. And they are looking at
Yeah,
the and I think that's a bit narrow because there's a much more things to look at, right? Than
absolutely.
just the rate. Um Now where do you see in terms of like the market right now, like the current Canadian market and you're in the Southern Ontario market, right?
Yeah, yeah. So I'm in GTA.
GTA.
I
Yeah.
can service all of Ontario, so that's a good thing about a mortgage agent. Not necessarily because I'm in the GTA, I can't service you elsewhere. And we also do a lot of Zoom and digital, so that's the best part of technology, at least for us. In terms of what I see is a lot of homeowners that were ready maybe last year, but the price point was a little bit too high. And now that they've come down, they're ready to see what's out there. So I think have faith in the spring summer market for a lot of the first time home buyers, and as well as the second thing I see is restructuring debt with
Oh,
refinancing for some
okay.
people to open up cash flow on their monthly.
Gotcha. Especially those who maybe bought their rentals
Yeah,
during COVID,
absolutely.
right?
Yeah, they're a little bit they're a little bit they bought at a high price point, and there's others that took advantage when it was a little bit lower, that
Mm.
had the opportunity to do that.
Okay, okay. Now let's dive into a little bit deeper now. What do you feel like the most or like the biggest lie that like Canadians believe about real estate financing?
That you have to necessarily only work with the top five banks.
Ah,
Yeah, like at the same, like your neighborhood bank is there, but there are great monolenders, credit unions, that they look at your bigger picture, especially if you're self-employed. I know there's a lot more programs coming out. So not necessarily your neighborhood bank is just it's like getting a second opinion. So you can go to
mm,
them first, see what they offer, and then you can shop around with a mortgage agent like myself that have the accessibility to these credit unions and other banks that can help you out.
yeah, I do see that. 'Cause sometimes they might feel a little bit disappointed or maybe give up on their you can say like dream or like their next phase because they just see that, oh no, I'm capped, right? Like, oh no,
Yes.
I have only my principal home or second home. I couldn't do I couldn't do more.
Yeah, absolutely.
Yeah, so I think chatting with a mortgage agent really helped them open their eyes to a much bigger picture. That hey, look, there's a lot more financial source out there, right?
Absolutely.
Oh yeah, yeah, no, I do see that. Now, if they were like now we talk because most of our listeners are investors
Mhm.
and they want to get into the game. How would you kind of like advise them in terms of like if they were to start from zero? Like what
Yeah, if they were to start from zero, one strategy that I would say works right now in not necessarily in GTA, but the outskirts that we look at, is house hacking.
house
If you're
hacking?
somebody who, let's say, is a young professional that's able to work from home, definitely house hacking. If you're more of a higher net worth, I would look at multiplex conversions. A lot of the
Multiple
cities
numbers.
and municipalities are allowing those permits to go a little bit faster in transitioning residential homes into multiplexes because of the demand of rental units that we need.
Okay, can you dig deeper into that? What's multiplex conversion? You
So
mind?
the conversion is that I believe, don't quote me on this, it's where you're taking in a structure that's already in place and converting it into 4 to 6 units.
Got it, got it. Yeah, I think that's a pretty lucrative strategy. I,
Mhm.
I heard a lot of people are doing that.
Yeah, and I think their financing is a little bit structured differently. Absolutely. I think believe that the amortization periods for it is a little bit longer, so that plays into your cash flow returns and whatnot. So that's what I would suggest.
Okay, because that would transition from the residential mortgage to commercial mortgage,
Yes, to
right?
commercial. And we know as investors, commercials looked differently than residential. But for somebody, like I said, like someone who's a little bit younger is able to relocate, I would look into duplexes because that one's still within the residential field. So at
Mm,
least you'll be able to get a good price point, and then have someone help you pay the mortgage.
okay, okay. Like I do know that this might not be lean more towards the real estate agent side, not the mortgage agent side, but I'm sure you might know in terms of like the best market for that, right?
I've seen a couple places out in Belleville that the return
Belleville?
is pretty good. Yeah. So like I
Okay.
said, outskirts of GTA.
Okay, okay, got it. Or in the US, right?
Yeah, oh, of course. I mean, that's the whole nother topic.
Yeah,
US
it's on the
returns and
border.
it's you and I both know that's not apples to apples.
Yeah, exactly, exactly. Okay, so now who do you currently helping right now? Like, are you leaning more towards the investor side or more like the first home buyer or both?
At the moment, both, like I said, the house hackers that are trying to
Yeah.
get in, and as well as the first-time homeowners.
Okay, okay. Now, for this question, I'm sure you came across a lot, especially the client that kind of like reaching out to you. But what criteria do you think that kills the most approval
Oh,
of
yeah,
the
okay,
mortgage?
this is a good one because it's not what everybody thinks it is, and I see a lot of deals killed is when people finance their cars
After or before?
beforehand.
Oh.
Because you know how, okay, so as a mortgage agent, we have certain ratios that thresholds that we work towards. And one of the pillars, like I had mentioned, is credit. And within the credit umbrella is credit utilization. So
Mm-hmm.
your income versus your debts. And most cases, when you do income versus debt and you add that financing number,
Mm-hmm.
it throws it completely off. So sometimes some people are able to pay off the loan before the purchase so that we can have those numbers look a lot more cleaner because now you don't have that payment.
Okay. Now, does the credit score take some time to reflect the changes, or would it change it instantly?
Yeah, well, not necessarily instantly, but yeah, it does have its time period where it reflects. In most cases, what we do to expedite it is you get a release letter that you've paid off the car loan and whatnot, and then that gives the lender, okay,
Oh,
they've already paid it, so they know that there's proof. And then eventually, like let's say towards your closing, it will reflect against you and
wow.
cause it
So,
more.
okay. So the main mortgage application deal killer is car financing.
Yeah. Yeah,
Oh,
that, I
hey,
would say at least
wow.
for first-time home buyers, right? And we need a car in GTA, so sometimes, unfortunately, that is one of the big deal killers that I see.
Yeah, I didn't expect that. So
Yeah.
now, yeah, everyone need cars. So how would you advise them? So how would you advise them, I guess, financing the car for maybe a year or two ahead, or
Yeah, like I would have to look at their scenario. Obviously, we would have to look
yeah.
at whether maybe, okay, they have to keep the car loan. Maybe we have to up the down payment a little bit to make it work.
Mm,
So little things like that we can kind of work together with because like, I said everybody does need a car in GTA. So that's why we look at the overall picture if there's something that we can do on our
mm,
end. Yeah. If
okay.
it's not possible to pay it off. Yeah. So
Yeah.
sometimes it's a little bit more time, a little bit more down payment. So we'll look at all the factors to see.
Okay,
Yeah,
okay.
that one's an unexpected one for a lot of people.
Really? Yeah, no, I think that's really great information. Now, I do know that um, down payment can be a problem too.
Hmm.
And I believe one of the limiting factor of any new home buyer is they don't have enough down payment, right?
Yes.
Or they haven't thought about like outside the box in terms of an extra source of down payment. Like how would you share with them on that.
Yeah. So there is gifted down payments that we know of, as well as there are shared equity programs that we have that are possible where they help you get to the 20%. There's also factors of like when you sell the home and whatnot, but to get you into the market, there are um, shared equity programs.
Yeah, tell me more about that. What is
Yeah,
that?
so I mean, in a short form, it's basically when it's you can either buy your portion out and pay back the shared equity program, um, or when you sell the home, they'll be getting off of the profit. So it's a whole another conversation, but in a nutshell, that's what kind of it is. So it does help people who don't have, the parents or the family member for the gifted funds.
Yeah.
Yeah.
Okay. Okay, awesome. So yeah, I appreciate your time for today, Stephanie. Thank you so much for hopping on a podcast. So now where do people find you?
Yeah, so you can find me on Instagram. I am bilingual, so I do have a lot of my social media in Spanish. It's called guiahipoquetraria.ca, but you can also find me under my name as Stephanie Flores on Instagram, and you can always send me a DM. And like I said, we're always open to answering any questions you have. Like the saying goes, like ask the question because if you don't, you won't know, right?
Yeah,
Yeah.
exactly. And I'll put the link down in the descriptions for you
Yeah.
guys as well so that you can check her out. And thank you for watching to this far, and I appreciate you. And if you are a Canadian who are looking to invest in the US or in Southern Ontario, Canada, you can let us know and join our investor letter in the link below. And we do also have upcoming events too, so you can just sign up and you will get notified in our upcoming event. Okay? So, yeah, thank you so much, Stephanie.
Thank you for having me, Hewitt.
Yeah, okay, awesome. See you. Bye.